Alright YouTube, Stocks by the Numbers, welcome back. Today is Monday the 6th, and I wanted to do a quick video here talking about ChargePoint Holdings, ticker symbol CHPT, listed here on the New York Stock Exchange. This is a company, of course, with their EV charging stations and whatnot. Stock right now, $285, down almost a quarter, about 7.5% here on the day. And as we see, we're about half a point away from our 52-week low. So let's see what's going on. So this company, first of all, got a price target lowered to 5 from 11. That is a big drop, yet they're keeping a buy rating, of course, because the stock is below that price target, so they're feeling pretty good about it. This company has been kind of struggling. If we go back, if we look, we can see some inconsistencies here in the revenue coming in. Sometimes we beat, sometimes we miss. Looks like anytime estimates are up above 150, they miss. But someone asked me about this. I think it may have been in the Discord, and I mentioned back here when earnings were coming out. As you see, I drew out the lines, look like a descending triangle, and I said that we were probably going to break. And as you see, we have completely fallen off a cliff. So I'm sure a lot of people may be wondering, is this a buy now, sub $3, or are we going even lower? Well, right now we have a market cap of about $1 billion. The company's losing a little over $1 a share. As we see, EPS was climbing, yet last quarter we had a big miss. As we see, estimates of loss of 13 cents, company comes in, loses 35 cents. So looking annually, though, on the revenue scale, the company has been doing actually very well, with revenue going from, as we see here, about 150 million up to 240 million, up to almost $500 million. The problem, of course, is going to be the losses that we look at. As we see, the company loses 350 million in the last year, and looking at Q1 of 23 and Q2 of 23, we can see that the profitability has been dropping, even though we had a slight tick up in revenue. So basically, in my opinion, you could almost say that the stock is potentially fair valued, right? Almost $500 million in revenue last year. The company has a market cap of $1 billion, so it's trading, right around like 2 times last year's revenue. However, the problem is, on paper, in my opinion, the company really isn't looking too good. So as we see here, the debt has ballooned up, going from 50 down to 25 million, now up to north of 300 million. And of course, you can see the light green there, the free cash flow. They were down about 100 million. Then almost 200 million, then almost 300 million. So the company definitely has some bleeding, and the short-term assets heavily outweighing the long-term liabilities. However, short-term assets outweighing short-term liabilities, long-term liabilities outweighing long-term assets. So that's why we have some positives, we have some negatives. However, it's just seeming like it's more negative than positive right now. So even if we may potentially say that the stock is fair valued, it's taken a big hit. B. Riley, even though they lowered their price target, they think it's going to like double from this level. So I can appreciate the fact that a lot of you may be looking to jump in, but in my opinion, I would actually remain patient. And what we're looking at here is, again, the revenue basically doubled here from, about a year ago, as we see. Revenue was about 80 million. Now we're up to 130, 150 million. So revenue is growing. Look at the cost of goods sold, though. Now, as of last quarter, it's basically in line with every dollar that they made. Total revenue minus cost of goods sold yields gross profit. As we see, gross profit just a touch over 1 million as of last quarter. That is now the lowest it has been going back the last, 7 quarters or whatever it is. Look at the operating expenses as well. Consistently increasing, really, no matter what the hell else is going on. And now the gross profit minus our operating expenses yields our operating income. And as we see, as of last quarter, 123 million and a third. Negative. Right, which is the lowest it has been going all the way back to basically the beginning of 22. So that's why this company is another situation, just like with a lot of these other newer tech stocks that we're looking at, where it is going to take quite a while for the company to start seeing some positivity here on the income side as well. I'm talking, the profitability side. But more importantly here, we can see assets climbed up to about $1 billion and have kind of plateaued for about the last 6 quarters here, currently sitting at 1.07 billion. However, look at the liabilities. Doubling here to the middle of 22, going from about 300 million and change to north of 600 million, and basically slowly and steadily climbing, now just a touch below 800 million. And assets minus liabilities gives us equity. And as we see, the equity has basically been consistently decreasing. And I mentioned that when equity goes down, book value per share goes down, as we see here. Book value, $1.63, consistently dropping down to sub-dollar, now currently sitting at 76 cents. Which means, again, if this company has to go out of business, liquidate everything in its name, it would be worth 76 cents a share. So, in my opinion, I would not be a buyer. I would probably wait for about $2. I would wait for about 3 times book value, maybe about $2.10, $2 even, because in my opinion, I do feel that they're going to bring it down before they bring it up. And as much as a lot of people, again, this is the key metric here, in my opinion, that we're looking at. And again, I know a lot of you may be involved in this stock. I understand the sector. I can appreciate the fact, years down the road, it could be big. I understand that. But again, we talk about pricing and timing. So if you're already involved in the stock, in my opinion, even if you were looking to add to the position, I would remain patient, personally. And also on the flip side, if someone mentioned this and you've been watching it and you're just waiting for the time to step in my opinion, I would also remain patient and wait for a little bit of a better entry. But, basically across the board, obviously cash flow negative. We looked at that before. But switching over here, looking at some of the statistics, right? We have some things that look attractive. And that is why a situation like this, in my opinion, is very dangerous. And we have price to sales now sub 2. That's the lowest it's been, right? Going back to the last 7-8 quarters. Price to book, it's now trading 4 times book value. However, it's still in sell-off mode. Right? So even though this is the lowest ratio we've seen going back the last 6-7 quarters, in my opinion, it's still really not indicating a buy signal yet. The return on assets was kind of bouncing around, got up to about the minus mid-30s, climbed up, looks like maybe about 10% from that level, and now we just kind of reverse back down to about minus 35%. The return on equity, of course, keeps dropping, and the return on invested capital, as we see here, about minus 56.5%, is now basically the lowest it's been, going all the way back here, beginning of 22. The gross margin percentage was looking pretty decent, as we see here, maintaining like the low teens to the mid and even high teens, getting above 20%, now sitting at 0.75%. Operating margin we looked at before, we looked at some of those numbers, and as we see, it was pretty negative, got up to less than minus 50%, and now just kind of started trending back downward, now sitting at about minus 82%. EBITDA, once again, earnings before interest, taxes, depreciation, amortization, was over minus 100% at one point, got down to sub minus 44, and has almost double dropped from that point, now sitting at over minus 76.5%. And of course, the net margin percentage basically fell off a cliff as well. As we see here, was much, much lower, and then got up to about minus 50%. And now we just kind of started trending in the other direction. Now we're sitting at about minus 83.25%. So it does have literally a handful of positives, but in my opinion, I just feel like the negatives are outweighing the positives. And I know, I'm talking about this in a pessimistic light, so to speak, and I understand, I can appreciate the fact that I'm coming to you potentially a little bit late here with the stock. As we see, it's down 8% today. So of course, if I made this video last week, I would have looked like a savant. But at the end of the day, there's just so many companies out there that are publicly traded. There's no way for me to know which one is going to move exactly the next day, which one are the bulk of you looking up and searching for, right? So I just kind of go down a list and just kind of review what I can. And that's why I always say, if you guys want me to look at something, just, leave me a comment or come in the Discord and let me know. It's no problem. I'll throw it up on the board. I'll take a look at it when I have a minute. But this inventory turnover kind of caught my attention here, because as we see, we were kind of steadily climbing, going from about 5.5 up to about 7.5. Now we slipped down to 5.25, 4.84. So that is something to keep an eye on. The asset turnover, I will say, though, has been climbing nicely, as we see. Minus that dip here from early January of 22 going into April, we can see we went from 0.31, just consistently climbing, 0.48, now sitting at 0.53. So that's why I feel this is definitely going to be more of a longer-term play as opposed to a shorter-term play. And the only real issue with a situation like this is the pricing and the timing, right? That's what I always say. Why force our way in here at 283 when we could potentially buy this maybe at like 233 or, 213, right? We can probably get this for a cheaper price. And that's basically what I'm going for here. But I will say, though, moving forward, as we see, looking at the estimates, it does look like the revenue is going to slowly start chunking up here, going from about the 150 million range up to north of 170 and eventually almost 200 million. So that's why they are planning bigger and better things, and you can also see the profitability expected to slowly climb, kind of narrow that loss a little bit over the next 4 quarters. But it's going to take some time. And if we switch over here annually, we can see the company expected not to go EPS positive until 2026 on estimates of $1.55 billion in revenue, which means the company has to grow its business, grow its revenue, roughly 300% from where we are now. Sitting, maybe like 230%, 250%, something like that. But either way, you can understand where I'm going with where I'm going here. It's going to take, as we see here, about 3.5 years from this point before we really start to see the company having some positivity here, on paper anyway. Now, 616 million estimated for 2023. Which, in my opinion, if they actually meet that number, they could be viewed as fair valued here with a market cap of $1 billion. But if we go back here, we can see that the first 2 quarters here in the first half of 2023, we brought in 130 million and about 150 million. So now we're at about 280 million, which means that if they keep that trajectory and we double that for the last 2 quarters, now we're looking at 560 million, which, as we see, is going to be about 56 million shy of this 2023 yearly revenue mark. So we have to wait and see. Unfortunately, I feel like I always say this, but again, this is what it comes down to. It comes down to the earnings and it comes down to the revenue. Now here again, we're having an estimate of about 157.25 million. And as you see, anytime numbers went that high, the company came in shy. Now granted, last quarter was only by a couple of million, so again, I'm not going to completely beat the company up. But I'm telling you, as of right now, it is the inconsistencies as to why people are just kind of jumping ship and basically looking at it the way I'm looking at it, knowing that they can probably get this for like 20% cheaper than where it's currently trading now. This 157 million mark is going to be big, in my opinion, and it could potentially kind of regain the momentum for the stock and start driving it upwards. However, they do have to beat those numbers. I like this subscription number here in revenue. Look at that, just in the last couple of years, going from sub 29 to over 40, over 50, now over 85 million. Of course, the charging systems are, of course, where the bulk of the revenue comes from, but the subscriptions as well looking pretty good. So, from a technical standpoint, again, I drew out this range going back long term. We were kind of consistently dropping into these triangles. And again, as we see, we kind of basically dropped down and had a little pop up. And now today we have a drop down. So what this tells me is this part right here since last earnings report almost looks like you could have said it was trying to wedge. Right? Descending wedge is bullish, means we wait for the pop out. And again, we had a little pop out, and now today we're down roughly 9%. Markets are now red. As predicted, shout out to the boys in the Discord. I told you I stand by my analysis. And basically, I have a feeling that, we could potentially... See, I don't even want to give you that wishful thinking, because I almost want to say it could slowly potentially retest the moving average before dropping back down. But again, now we're talking like 370, 380, right? So we're talking like a 40% move to the upside. And the only recent news is that they got their price target lowered by like 60%. So I'm not really sure if that's going to be enough to really help rally it back up to 370, 380 and meet up with that moving average. So I do have a feeling that after this pop and after this big drop today, I do feel that over the next several weeks, we are potentially going to continue to drop down. Now, if we do hit the low twos, in my opinion, probably going to be maybe the week of Thanksgiving. And then we could potentially have the rally up going into these earnings here. And if the company does happen to beat those earnings, what could I say here? See, looking at the chart realistically, right, we want it to get back to this fib level here of about 499 and, of course, retrace above this long-term blue support trend line here that it broke about 2 months ago. But again, I just don't feel, even if they beat here and come in with like 162 million, I just don't know if that's literally going to be enough to take the stock from 250 to 260 up to $5 a share. I really don't know if that's going to happen. However, I will say, as the stock slowly sells off here to the low twos before rallying into earnings, we will, of course, be pulling the moving average down, which then that could be your point right there, potentially getting back to that resistance that it hit, that it rejected off of, and hopefully that meets up kind of and diverges with the 20-day moving average. And after the earnings, if they do beat, you could potentially get back to like that 330, maybe even 340 mark. But again, I personally feel it's going to go down before it goes up. And, I'm sure a lot of other people watching this video are, all over this stock, keeping an eye on it. So, of course, as I always say, if there's anything I didn't mention, please let us know down in the comments section. I always keep an open mind. I'm open to all viewpoints. But again, sometimes just looking at our simple revenue to market cap comparison, they brought in, 500 million. They're at $1 billion, so it's undervalued. Sometimes that does work out. However, most of the time when I look at a situation like that and I personally declare it's undervalued and then the stock actually starts rising, the difference is we're talking about a company that's a little bit more consistent. That's what we're talking about. So, like in a situation like this, if we were looking at like Coca-Cola and we saw, it's only trading 2 times yearly revenue, like chances are with a company like Coca-Cola, that means that it's undervalued and the stock is going to start running. With a company like ChargePoint that apparently is losing significantly more than it's making, basically breaking even. As I mentioned, after the cost of goods, they're basically breaking even, and then the operating costs are a couple of $100 million after that. So that's what I mean. This company definitely going to take some time, and if you're involved, I do wish you the best of luck. But in my opinion, I do think it's going to get worse before it gets better. As you can see, random ad right there. As you can see, big rejection there. Got above the mid-Bollinger Band and then kind of came back down. And as we see, it tried to climb up and rejected here today. I will say on the daily, it does look like the MACD has recently crossed, though, and started moving, coming off these bottoms. But in my opinion, I just think it's just a short-term relief. And as we see, even backtracking here, we can go all the way back to mid-July. Again, in my opinion, during that fake rally. And you can see that was really the last time that the stock was kind of maintaining a value even above this mid-Bollinger Band. And since then, at any time it has come up, it has rejected. So that's why I do feel pretty confident that we are going to go down before we go up. RSI on the daily, a touch below 36. Could be viewed as, oversold, kind of near that range. However, look at how low the RSI was for the last couple of months as the stock basically went in free fall from 6 down to about 2.5. So the RSI cannot be an indicator for this stock, in my opinion. And even looking on the weekly, look at this. We were consistently dropping below 30 for several weeks as the stock continued to chunk down. Now, it does look like it may potentially be flattening out here on the MACD. But again, with this big drop here today, I have a feeling it's going to kind of continue to curl downward. And RSI on the weekly sitting a touch over 27. Again, really not an indicator. So, I know I kind of beat it up. I probably talked a little bit longer about this one than I wanted to, but overall, in my opinion, me personally, ChargePoint CHPT, I would remain patient. I would get a better price. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, like the video. Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. I will do videos on ChargePoint. I'll give you guys update videos. I'll try to make some short-term call-outs in the Discord. Again, Discord link in the description of every video. You guys are more than welcome to come in. And I will do all of that for you guys. All I ask, just do me one favor. Push the subscribe button. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next vid.